Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin. And in today's episode, we are going to be talking about how last night, Bitcoin officially broke through the level of $29,000. That will be music to any of my viewers' ears because, as you guys know, a major level that we've been looking at here is $28,545, which Bitcoin is actually threatening to break below right now. But if Bitcoin does manage to stay up here for any length of time, which has already been up here for over 12 hours, then Bitcoin is putting a massive, massive dent in the armor of $28,545, that being that key level of resistance that we've been looking at. Bitcoin did set a new local high last night, indicating that we are at local top territories. And if we are able to continue pushing here and push through $29,000 and actually break away from this zone and, if you will, get on the other side of the mountain, as we talked about with the analogy yesterday, then that's where Bitcoin's going to start having a very fun time. And you'll likely see a multi-$1,000 rally, especially considering we're actually not far away from the April 12th CPI data report that will be dropping at 8:30 a.m. on that day. That's only 14 days away now. It's almost exactly 14 days away now. And when that does come out, that is going to be huge news for Bitcoin. If it's even so much as 0.1% to the downside, then you're likely going to see a massive, massive rally on Bitcoin. But we have a lot to talk about in today's episode, so very quickly, we're going to jump right on into reading some of your chat. Wisely T at it again, because Wisely T likes to copy and paste his comments so that he can be first or second. He can get those questions in. That's a wise strategy, Wisely T. It's in the name after all. Crypto Manny Bear said, I am first. You did manage to beat Wisely T, at least on my end today. Now, it might look different on y'all's end, but on my end, it looks like you got it. So good job, my friend. Wisely T said, hey, Jeb, do you think at least $5 ADA is likely next bull run or not? So much because of what you said the other day about what $5 means for its market capitalization. Yes, the thing about that is that if we go to CoinMarketCap, and I'll answer this relatively briefly, just so that we can keep reading some people's chats. But if Cardano is going to go to $5, the fact of the matter is Cardano is going to need to be worth about $180 billion. Reason for that, because if you multiply its current market capitalization by about 3, then you're going to get $36 billion. Let's just do some quick maths here. $36 billion. Multiply that by 5, you get about $180 billion. So you're going to need to see about $175 to $200 billion, somewhere in that range, to see Cardano being at that range with current circulating supply, which is likely to stay about the same. You're going to need to see it roughly $160 to $180 billion in market cap at some point in there. And that is feasible. That is doable. Cardano was over half of the way there during the last cycle. We saw Cardano approaching nearly $100 billion in market capitalization. I think you will see Cardano end up doing something very similar to what Ethereum did during the last bull market, where it didn't just completely and totally just absolutely ravage its previous bull market highs. Instead, it about tripled where it was, which, I mean, if you're in a stock world, then yeah, that's completely devastating your previous highs. But you look at the all-time history here. In 2018, you saw market capitalization for Ethereum rally to about $135 to $140 billion market cap. The next bull market, it ended up achieving $550 billion in market capitalization. It ended up doing very, very well for itself. I think you could see something very similar happen to Cardano, where the next bull market could look like what Ethereum's last bull market did. I think Ethereum is going to be the one that kind of defines what multiple cycles on bull markets look like. A good example of what I mean is that most of these altcoins are so young that they only have 2 bull markets on the books. Ethereum is one of the oldest dominant cryptocurrencies with solid bull market, bear market structure, and it only has 2 to speak of, whereas on Bitcoin's history, it has 4. There have been 4 bull markets in the history of Bitcoin. Ethereum only jumped in the 3rd, and then also did very well in the 4th. Cardano's only had 1 bull market, and that was the last bull market where it really was, relevant. Cardano did have some price action back before that, but that was the first time that it was really relevant to the zeitgeist of cryptocurrency. I think the next bull market will be Cardano's second, and I think it'll actually look a lot like Ethereum's second bull market, where Ethereum did manage to more than double its previous highs, because of course Ethereum's local high, all-time high was about $1,400 it ended up rallying to $5,000. I think you could see Cardano at least attempting to double where it was before, if you end up seeing trillions and trillions of dollars flowing into the cryptocurrency space. And with trillions and trillions of dollars flowing into the cryptocurrency space sounding a little crazy, you might need an explanation for how that could happen. Well, I point you right here. We've had $1/3 of $1 trillion flow into the cryptocurrency market capitalization chart in just a span of 21 days. So a little bit of a long-winded answer here at the very beginning of the stream, but hopefully that was helpful to you, Wisely T. I absolutely believe that Cardano could go to $5, but as we talked about on that previous stream, Cardano does run into some difficulties with the fact that it's going to need to really capture a lot of TVL. It's going to need to capture quite a lot of growth on chain. There's going to need to be decentralized application projects, NFT protocols, DEXs. You're going to need to see other things to do with GovTech. That's one of the big areas that Cardano wants to tackle. You're going to need to see some governments using Cardano in some capacity. You're going to need to see some actual utilization of its ecosystem. And then I think that's where you'll warrant those high market capitalizations. Otherwise, it will remain a great technology with little adoption, and that would be that wouldn't be a death sentence, but that would mean that it would probably trade sideways for quite some time. All right, let's read some more chat. Mike Lowry in chat, who is a mod and also a member of the Jedi Knights. Thank you so much, my very good friend. Really appreciate that. He said, good morning. The Crypto Flip said morning. Bullseye Bear said, good morning, BTCers. Good morning. We've got vaccinated to anti-vaxxer. There you go. Walking oxymoron. I know you two are brothers and sisters, right? If ADA gets to $5, I'm a quarter millionaire. There you go. Wow, good for you. Cigar smoking duck. Wow, we got some interesting names in chat here. Said, good morning. Good morning to you, cigar smoking duck. Be careful that you don't get a hole in your neck or something. Sean O'Brien in chat said, yo, King Jeb. He even broadcasts from his deathbed here every day to tell us what's down. If this copy and paste ain't first, I feel like a clown. Sean, you were, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th. You weren't first, you were 10th. We added a 0 there because you're a 10. All right. From my deathbed. Luckily, I'm not dying. I'm feeling all right now. I got a little bit of a tickle in the back of my throat. My wife's sick, so I'll probably be getting sick here over the weekend, so I'm looking forward to that. But, by the way, and I'll say this, and then we're going to jump into some TA, because I know that's what you guys came for. As of today, we are full term. We're 37 weeks based on the latest date for our daughter who is in the womb. So 37 weeks to 40 weeks is full term, which means baby could come any day. So be warned, there is a 1 in 24 chance, maybe like a 1 in 30 chance, that the baby will begin active labor while I'm on stream. And if that happens, I'm going to do this. Peace. And I'm going to run that. No, well, that's probably what's going to happen. I'm probably going to say bye. I'll see you guys here in a few days after the baby's born, because I'm going to have to split because we got to go to the hospital. So there is as I said, like a 3% chance that'll happen while I'm on stream, because I'm only live for 1 out of every 24 hours. I'm only live 5 out of 7 days. But if the baby comes, I'm going to probably wrap it out in a couple of minutes and then say bye, and I'll keep you guys posted on Twitter or something like that. Make sure to follow me on Twitter. You can find a link for that down below. All right, we're going a little long here on reading chat, but I really enjoy interacting with you guys. Then we'll jump straight into the TA. There's a lot to talk about, but it's actually going to be relatively simple. So I'm not too worried about taking a little bit longer. Colin McDonald in chat. Mike Lowry in chat also said, don't forget to smash the likes, y'all. John, let's see. I was reading somebody's name and then it jumped down on me. John somebody's in chat. Sorry about that. I have the Beholders in chat. Crypto Mini Bikes in chat. Full term is the best news ever for how this pregnancy has been for you two. You're absolutely right. Crypto Mini Bike, the baby has been trying to come early for 3 months, so we're very excited to know that she's in perfect health as far as we know, and that she's full term and she's a good size and everything. We're really excited about that. Malachi was born at 38 weeks and 5 days. She is 37 weeks by the latest date, or 37 weeks and 37 weeks and 3 days by a different date. So she's close. All right. It always happens after you leave for a minute. Well, luckily, my wife gets to come to work with me right now, so she's here. Like, if something happens, I'm right here. Boom, I can do something about it. All right, let's go ahead and jump on. I'll answer this last question, then we're going to jump into it. Robert Casanova said, Jeb, have you guys picked out a name for your daughter yet? We have, but we're not going to share it just yet. We'll probably end up sharing it in some kind of special way. I don't know what we're going to do there. We haven't planned anything like that, but yeah, we're not going to share it just yet. But let's go ahead and jump onto CoinMarketCap and get into the actual TA. Right now, Bitcoin is trading at a very special price level of $28,471. For any of you guys that have been following this channel for more than 2 days, you will know that that is very close to a level that I keep talking about and that I've been talking about for, I don't know, the last 3 months. That would be $28,545. I have been hammering that this level is very, very important. I'm going to show you again on today's chart why. But the first thing to point out is that Bitcoin is actually kind of sideways in the last 24 hours. That is very significant. Why? Well, the reason it's very significant is because Bitcoin trading sideways in the last 24 hours goes to show you that we've been sitting at these levels for 24 hours. Right now, we're falling down out of the bullish range, and we'll talk about that in a minute. But the fact of the matter is, Bitcoin's been sitting up here right below resistance for over 24 hours now, and actually broke all the way above it. Our local high now is set at $29,190. I think it's exactly $21,980. Let's go to the 10-second chart. Upgrade to the highest level of premium you can have on TradingView. So hopefully, I'll be able to see that. You can see Bitcoin rallied all the way up here. Let's just go ahead and draw a horizontal line as close as we can get it. Bitcoin rallied all the way up here to $29,189.75. That's our current massive local level of resistance. That is our biggest test yet. And that also does indicate that Bitcoin rallied $650 above 28,545 in the span of just 20 short minutes. Remarkable. The reason that's so important is because Bitcoin has attempted to break above this level multiple times. We broke above it briefly on a wick right here on March 20th. We broke briefly above it on a wick right here on March 21st. Then we broke above it for 5 candlestick hours here on March 22nd. Then we broke above it again for 2 candlestick hours right here, candlestick bodies. Thursday, March 23rd, that was a week ago today. Then for the last 2 days, we've been attempting to break above this level over and over again. You can see right now we're falling bearish out of this zone. Not too worried about this. I'll tell you why in a little bit. The fact that I'm very excited about is that Bitcoin broke and smashed, I'm talking absolutely disintegrated, these 2 previous local highs. You can see these two horizontal lines right here represent the local highs that Bitcoin set right here and right here at 28,824 or 28,836 and 28,942 respectively. Well, Bitcoin closed an hourly chart candlestick above both of those, and those were not constituted by candlestick bodies. Those were constituted by wick highs. The highest level that a candle body had previously reached up to was 28,712, and we broke above that twice. We broke above it the first time, and then we went up and tested it again, and then broke above it again. You can even see just how much the technical analysis came into play here. We'll talk about this a little bit later. I'm getting a little bit into the weeds. We're going to jump into those weeds here in a moment, but first, I want to go ahead and finish up what we were talking about on CoinMarketCap. Right now, Ethereum is sitting at $17,900, and it is up only 2.18% over the last 7 days. Something else I want to point out. Notice how Bitcoin is doing so well right now, and it's only up 3% over the last week. Isn't that remarkable? That's because a week ago, we were at these exact same levels. Almost exactly 7 days ago, we were at these exact same levels. It just goes to show you that Bitcoin's been up here testing this resistance quite a lot. And there was a moment there where we thought it was going to go through a pretty large correction. And technically speaking, there was a good reason to believe that. There was a solid argument for that. Just didn't happen. Sometimes the market doesn't follow that. Sometimes the market has its own whim that it decides it wants to follow, and that's what Bitcoin did. Bitcoin decided that it was going to be very bullish and it was going to go through a massive rally. By the way, if you guys are enjoying today's stream, make sure to go ahead and smash that like button. I really appreciate all of you guys tuning in. Make sure to subscribe to the channel, and also make sure to turn on that post notification bell so you won't be missing out on any of the charting that we do here every single day. All right. Binance down 0.42% over the last 24 hours. XRP down 2.8%. Cardano down 2 1/5. Down 2 1/4 rather. Over the last 24 hours, Polygon's down. Solana jumped back into the top 10 because Binance USD is continuing to hemorrhage market capitalization. You can see over the last 7 days, over the last 7 days, here we go. It has lost a good bit of market cap. It's lost nearly $400 million worth of market cap. That's because it is no longer being minted. You guys will remember that there was an SEC issue there with Paxos. They're no longer able to do anything with that. All right, let's go ahead and look at the Bitcoin charts, though, because this is where we're really going to want to hone in our attention. As you guys know, Bitcoin was sitting at a very, very, very decisive point just 2 days ago on Tuesday. Here on Tuesday, moving into the morning of Tuesday, we were sitting in a falling wedge, into a falling trading channel, and that falling trading channel had a price target that was down around $26,000. That price target around $26,000 had a pretty high likelihood of coming to pass, especially considering things like hourly chart Lux Algo had just confirmed bearish. We were below the EQ cloud, which was also bearish, and we were also falling into the bearish reversal zone, and we wicked all the way down to the bottom side outside of the bearish reversal zone. There was a lot of reason to believe that we were going to move to the downside. That's not what happened, though. Bitcoin decided that it wanted to go to a rally, and I think a lot of that had to do with the fact that Bitcoin was able to hold for about 12 hours this support that we saw around 26,686. That was set by 3 levels. This level right here, the most recent on the 22nd of March after our drop from the local high. Then this level that we set right here on the 18th of March. And then also this resistance that we set when we initially broke above 25,236 right here on the Ides of March 2023, day before the Ides of March. The Ides of March Eve, I suppose you could say. They were indicating that the bears were going to be attacked 40 times by a rising knife, I guess you could say. Forgive the Roman references. Anyway, with Bitcoin rallying through that level, through this downtrending level right here, it then very quickly had to come to contend with this uptrending level of then resistance, now support, and Bitcoin was able to break through it very easily. In doing so, it set the stage for Lux Algo to flip bullish again because we saw a buy signal, the very same candlestick that we saw green. We broke through the top of the EQ cloud and the EQ cloud, and then it started to converge bullish on itself, and we broke all the way to the outside of the reversal zone on hourly chart. Fell out of it, but as we talked about on yesterday's stream, if Bitcoin could just ride this downtrending level of support, which you guys probably thought was a little bit crazy because it was only defined by these 2 candle wick highs. But if we could ride this downtrending level of support, we'd probably be okay. Bitcoin managed to do that, and it stayed up here in this kind of like broadening, inverse ascending triangle pattern, whatever, backwards ascending triangle pattern, whatever you would call that. This is not a pattern that you see very often where you see flat level of resistance, then falling lows. That's I have not seen that in many years. But anyway, it was there, and if Bitcoin could stay in that pattern, then it would likely end up finding the strength that it needed to break to the resistance through the resistance. Because if you are sitting right next to resistance and you have any kind of bullish pressure, any kind of bullish sentiment in the space, oftentimes you're going to see the bulls flood in because the bulls want to test that resistance while they're right there. They get excited. There is excitement. There is frothing at the mouth. There is excitement and adrenaline and exuberance in the bulls right now. People are thinking, wow, we're so close. We're so close. There is so much hype. There is so much pent-up angst about a massive breakthrough because we've tested this resistance level once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. This last time was huge. And people are saying, I'm just ready for Bitcoin to get through 28,545. I'm buying, dang it. And people are buying in droves right now. And that's where you see Bitcoin has this massive shoot up because people are thinking, oh, it's right here. It's right here. I'm going to do it. I'm going to buy. And then they buy, and then it rallies up there, but it doesn't last. Now, the question is, have we put enough damage in the armor here for 28,545 to officially be broken yet? I mean, it hasn't been completely broken yet. We haven't actually flipped the script. The market isn't now trading up here above 28,545. We haven't turned it into support yet. We're below it right now, in fact. But the question being, have we done enough to actually break through it? Very possibly. Let me just point something out to you. Let me see if I have a clean chart here. I don't think I do. All of my charts are very dirty because I'm always doing a bunch of technical analysis on them. This is a chart that I put together about 2 weeks ago. I think I can clean this up just a little bit. Here we go. So this is a chart here. You can see the transitionary zone right in here. That's this red box. Very important. But what I want to show you today is this pattern right here. You see how we came up here and we tested the resistance once. We didn't really manage to get through it. Fell back, went into a major correction. Then we came up and we had a bigger test the second time. I can't really do this on TradingView. I can't just expand this, but isn't that exactly what we did here with 25,236, except on a longer time frame? Rallied up, had a small test, and then we broke through. We would be, if this market is analogous to this market, then we are right here. You see what I mean? We had multiple tests over here on 25,236. Again, let's say 25,236 is analogous to 28,545. We had multiple tests on this resistance level over here over and over and over again. We tested it half dozen times, 3, 4, 5, 6 times. Then we had a pretty large correction. We're not able to sustain it. Then we shot back up very quickly as people got very excited because they said, oh, we almost broke it last time. Maybe this time we'll break it. And then we went up. We overshot. We actually did break that level for a brief period of time. Then we fell back to the downside, and people were thinking, oh, no, we rejected from 25,236 again. It's over. It's over. We're never going to break the resistance. But there was so much buying pressure, and the bears were so scared that they didn't sell, that the market stayed right there below the resistance level, and eventually we inched back up there, and then we just started moving to the upside. I wager that we might be in a similar boat right now. We might be in a similar boat where this market is analogous to this market. This bounce is analogous to this bounce. This local low is analogous to this local low. This rally and largest yet breakthrough of the resistance is analogous to this largest yet breakthrough of the resistance. And then the next thing we might do is come back down, maybe to $28,000, maybe even a little bit lower. But over the next few days, perhaps we end up going through a major rally and we test that resistance one more time and we're able to break through it. You guys tell me what you think. I think both of these markets actually look very similar just on smaller time frames. And the fact that they're on smaller time frames actually gives me even more encouragement. For Bitcoin to drop far enough into the metaphorical trampoline to get enough potential kinetic energy that it could then jump out of it with enough strength that it would break through the ceiling, it had to drop $5,500 over the span of 3 weeks. In this case, Bitcoin did not have to drop that far. Bitcoin, unlike what we predicted, only had to drop 5 days, $2,000, negative 7%. If you remember, this is my prediction. And I don't really feel bad about this prediction, but I am perfectly comfortable to tell you it was wrong. We predicted that Bitcoin was going to need a stronger trampoline movement, if you will, here, to go through enough of a pullback to gain the momentum that it needed to be able to go through that massive rally. This was, in effect, our prediction right here. If I just strip away all these other kind of boxes, this was in effect basically our predictive tool here. I was saying that Bitcoin would probably go down to 25, then bounce, and it would take longer because we were working with a similar time scale that we were working with back here. But the point is, Bitcoin flipped the script and made everything go a lot faster. Now, I'm going to put the rest of this here just so I still have it. But instead of Bitcoin following a time scale like it did back here in February and March, Bitcoin's following its own time scale, its own timetable, and it's moving much faster on this bounce and on its second return back to, not its second return, but its first return back to its local level of resistance that it's trying to break. It managed to do it in a few days rather than in a few weeks. And so that gives me a lot of confidence that this actually could be the moment. Now, the question that I want to show you is that can a few of these bearish factors that I'm going to show you stop this breakthrough of 28,545? Are a few of these bearish indications that I'm going to show you, will they be enough to prevent Bitcoin from breaking through the massive level of resistance? And by the way, guys, if you're enjoying today's stream, make sure to hit that like button, subscribe to the channel, hit the post notification bell so you won't miss a single stream, and stay tuned because I've got a video coming out on Thursday that I think you guys are really going to like. So make sure to stay tuned. I'm really excited for it. Make sure to hit that subscribe button and make sure to go back and watch some of the videos we've uploaded over the last month or so. I think you'll really, really enjoy every single one of them. All right, let's go ahead and jump right back on into the charting. One of the things I want to bring to your attention here is that Bitcoin has two local highs right now. One of them was set at $28,645, $100 exactly above our local level of resistance. That was set yesterday. You guys will be aware of that right here. The next level of resistance that we saw was right here. That level of resistance was at roughly $29,156 and change. The problem in between those two local highs, first of all, Bitcoin's MACD converged bearish. Bitcoin's MACD converging bearish is not something that you wanted to see, and I'll tell you why. When you're going through a massive rally and you see the market set two local highs like that, oftentimes what you are witnessing is an attempted breakout of something. You typically want MACD on your side during that time. That's not what we saw. Or if you did see a bearish MACD cross during this corrective cycle, you'd like to see a bullish MACD cross come into play relatively soon after you hit the local, after you break through the resistance so that you can have some kind of strength. And you can see here that MACD jumped sharply. You don't see this happen very often, but MACD was moving down and then boom, instantly, it was almost green. And then it started moving to the downside again because Bitcoin was only bullish for an hour here. Otherwise, it's been in a massive downtrend. So that's not really the best look for Bitcoin. On top of that, if you look at the trend lines, you'll be able to see that there is a downtrend here on the resistance levels for the RSI. When you look at the local highs, you can see this RSI peak was right here. This RSI peak was right here. You can see that the trend on the highs right here is up. The trend on the highs right here on RSI is down. For any of you guys that are in the cryptocurrency technical, old habits die hard. For any of you guys that were in the Cryptocurrency Technical Analysis Academy, or any of you guys that are currently in Club DeFi, you'll be aware of RSI because we talk about RSI quite a lot, and we talk about RSI divergence in here, right down in here when we talk about divergences right here. That's one of the kind of divergences we talk about. And then we also talk about RSI in here as well right there. And we have a specific dedicated video on RSI divergence. So what is it about RSI divergence that's so concerning? Well, whenever you see a bearish divergence like this come into play, typically it does mean that a downtrend is coming. But how do we know it's a bearish divergence? Well, you know it's a bearish divergence because it's on the resistances. Very simple. There's about, here, I'll give you an example. Types of RSI divergence. I'll show you a cheat sheet. They've got cheat sheets for these. And we put one together in Club DeFi for you as well. You've got different RSI divergences here, and there are, regular, hidden, exaggerated, all of these different things. The fact is, if there's divergence on the tops, it's bearish. If there's divergence on the bottom, it's bullish. That's pretty much the simplest way to understand your RSI divergences. Now, we can see here that our divergences are on the resistance. We have an uptrending level of resistance, downtrending level of resistance on the RSI. That is bearish, and that does put a little bit of a damper on any hope that Bitcoin would have of going through a massive rally right now. So what Bitcoin needs to do is it basically just needs time. It needs to run out the clock and needs to let the quarter end, and it needs to reset things a little bit. And one way it can do that is by doing exactly what it's doing right now. It can drop back below 28,545 down to local levels of support, such as this downtrending level of support right here. Then it can bounce, and then it can attempt to rally again. After that RSI divergence has played itself out, and after it's so far into history that nobody's really paying attention to it, I would give it another day, and nobody's going to remember that RSI divergence. Tricky thing is, out on the daily chart, we're seeing some of the similar things happen. And this is where it gets hard, because to put this behind you, you need weeks, not days. On the daily chart, Bitcoin is attempting to set new local resistance levels, but there's three things that are stacked against it. Let's go to a cleaner chart. There's three things that are stacked against it. First and foremost, Bitcoin right now, if it closes where it is right now, will be setting a gigantic shooting star formation, indicating that yes, the bulls have the strength to break up to $29,185 or whatever the exact number is. They did not have the strength to actually maintain up there. If we can close the daily candlestick up here above 28,545, hallelujah, that may be enough to kick off a new bull market. If Bitcoin is then not able to close the daily candlestick up there, this is actually a very bad candlestick for Bitcoin, because it shows that we had the beginning of a rally here, we had the body of the rally here, then we had the end of the rally here when we saw the massive shooting star formation, and you'd probably see a daily chart red candlestick coming in tomorrow based on the daily chart view on things. So you don't want to see the candlestick close down here below 28,545. That could potentially be catastrophic for the technical landscape on Bitcoin, because it would set up the candlesticks to tell us that 28,545 is too strong and we can't break it. That being said, we did actually do the same thing back over here. We saw a small candlestick, then we saw two body candlesticks here where the bulk of the movement took place. Then we saw a shooting star formation because we were trying to put a chink in the armor. Traded sideways for a couple days, came back tested it, and went through a massive rally a couple of days later. Few differences. Number one, when that happened, MACD was below the zero line and had just crossed bullish. So you had bullish RSI, bullish MACD. Likewise, you had RSI just crossing above the 50 line, right above the 14 level. 2 days prior, RSI was moving to the upside and was doing great. This time, MACD is just fighting to hang on to bullishness, or we're going to see a bearish MACD cross. And also, in this case, we have bearish RSI divergence again. You now, because of this local high, have set new higher highs on the daily chart through the candle wicks. And if you don't want to use the candle wicks, through the candle bodies also. And you have a downtrending level of resistance on the RSI. You know what that tells you, right? That tells you that Bitcoin is now set up in a triple whammy of bearishness, indicating at least a few days of bearish corrective movement. That's not really what you wanted to hear, right? Well, luckily, there is a way out. The way out is that Bitcoin needs to put this hammer formation that is trying to form right now on the hourly chart. It's got 29 minutes before it happens. This is the candlestick that is happening while we're live. It started the moment we went live. It'll end the moment that we end the live stream. We are, if you will, monitoring this candlestick. We got our eye on this candlestick. I'm watching you, hammer formation. Please turn into a hammer. If that hammer formation comes in and Bitcoin is able to break above 28,545, then great. If Bitcoin is not able to break above 28,545, then that is where you're going to run into quite a lot of trouble. Because as I said, not breaking back above 28,545 would put into motion that bearish RSI divergence. Yes, the bearish RSI divergence, which that's probably going to happen anyway. But if you're above 28,545, the bullishness of that would probably at least somewhat negate the bearishness of the RSI looking the way that it does. And then also, if you have a green candlestick of any caliber, then you're likely going to see MACD will stay bullish at least for another day. You're not going to see MACD converging bearish on itself if you're seeing a you're not going to see it converging bearish on itself that much anyway if you're seeing green candlesticks. Now, keep in mind, there is a certain kind of elasticity to MACD where the further it gets away from the zero level, the more that it needs to come back down to the zero level. It is like a rubber band. The further MACD gets from zero, the harder it is for it to get any farther from zero, which means that you have to maintain even stronger green candlesticks to keep MACD away from the zero level. And that's why you can see, even though we're green right now, MACD is actually just ever so slightly, and you can see here from the histogram, just ever so slightly converging on itself. Histogram dropped from 50 points down to 49. Even with a green candlestick, MACD is converging bearish on itself because it is so overextended. And that's one of those factors that comes into play to show you that Bitcoin really cannot rally forever. It's got to have some kind of price action correction eventually, or just a massive bout of sideways action. So with all of that in mind, what happens now? Well, as we talked about, this downtrending level of support is kind of critical. And as you saw at the beginning of this show, we saw Bitcoin drop down to 28,267. It dropped down there, and it basically bounced right off this downtrending level of support. I'm going to adjust this a little bit now to try and match the market a little bit closer. I'm going to adjust it to look like this. This is the downtrend that we're going to go with. You can see that it intersects up here basically perfectly, but it also matches our two local lows right here. So really, it all comes down to this downtrending level of support right here. Can Bitcoin hold on to this downtrending level of support or not? Well, the good news is, obviously, Bitcoin didn't go back and test that yet. Right now, that downtrending level of support is at 28,000. That's the level I was telling you about earlier, so important. Right now, Bitcoin also has another uptrending level of support right here that could potentially give it strength. And then it also could end up drawing a level of support right here based on this resistance level. And I'll just go ahead and delete some of this to make this a little bit easier to see. And it could also be drawing a level of support from these levels right here. You can see that come from this level of resistance, this level of support, and then also the level that it just drew. So there's about 3 different trend lines that could come into play with various levels of strength. I'm not saying that any of them are particularly strong, but various levels of strength that could come in and give Bitcoin some kind of cushion above $28,000. The question is whether or not Bitcoin can hold those levels, and that's going to come down a lot to the sentiment of the bulls. Are the bulls ready to hold on here and fight after they've already done so much fighting in the last 3 to 4 weeks? Remember, guys, the bulls have rallied the market to this local top, nearly $10,000 in 3 weeks. Those are bull market rallies. That's bull market rally territory. We were sitting at $19,500. We rallied to $29,150. That's remarkable. That's a 33% increase on price in 3 weeks. That's 11% a week, 1.5% a day. I'm sorry, not 33%. That's a 50% increase. I said 33% because 10,000 is 33% of 30,000, but of course moving from 20 to 30 is a 50% increase, so I apologize. That is a 50% movement in 20 days, which is roughly 13 to 14% a week, which is roughly 1.5 to 1.6% every single day. Do the bulls have enough in the tank to go through a massive rally again? Well, I think that comes down to a little bit of fundamental analysis, so let's go ahead and talk about that. Here's the problem. Much of this rally has occurred because of the retail. Not a lot of this rally has occurred, as far as I can tell anyway, because of institutional interest. I think quite a lot of this has occurred because you have seen an inflow of retail. When you see Bitcoin breaking above $20,000, that generates headlines. When you see Bitcoin breaking above $25,000, 25,236, that makes headlines. We were one of the channels that broke that 25,236 was going to be a critical level of resistance, and it is. When you break above that level, that generates a lot of headlines. When you come up to 28,545, and when you rally $10,000 in 30 days, 20 days even, that generates a lot of headlines. However, it does not get you the confidence that you need in the institutions to jump into the market, because they're not looking at headlines. They're looking at the massive number of fundamental confirmations of bull markets that they need to witness to say that they are ready to jump into the space. What do I mean? Well, quite simply, you need to see Bitcoin breaking above probably $32,000 to $33,000 before many of the institutions get into the space. Why? Because they're waiting for more confirmation. We're still in that transitionary zone. I think that somebody is... No, we're good. I'm sorry about that. I thought we were having some technical difficulties. These institutions want to see Bitcoin really strongly into bull market territory. So they want to see Bitcoin at least getting back up to 50% of all-time high. We're not even 50% retraced from all-time high yet. We're still farther to the downside than that. With all of the rallying that we've done, remember, we are still over 50% retraced from all-time high. 57% retraced from all-time high, and the all-time high was a year and a half ago. The institutions are saying, on the grand scheme of things, this is interesting. Okay, Bitcoin, yeah. All right, we had this downtrend right here, general downtrend. Now it looks like Bitcoin's kind of setting a new general uptrend. Okay, looks pretty neat. Prove it. That's the sentiment of the institutions right now. And you can't hardly blame them when you look at the historicity of Bitcoin, and that is a real word. When you look at the historicity of Bitcoin and you realize, wait a minute, there's this pre-halving phase of the bull market that we're moving into. Yes, we're going to probably see some trading up here, but first and foremost, we have to break through the transitionary zone. Second most, we have to get closer to the halving to really kick off a bull market. And third most, you've got to see everybody else jump into the space. Nobody wants to be the first one off the boat on D-Day. Nobody wants to be the first institution to dump $100 million into Bitcoin and then get wrecked. They don't want that. They have shareholders to appease. They have a PR department that would burn them if they did that. You lost $40 million in 3 minutes. The PR people just start pulling their hair out, right? Or they start pulling out the investor's hair, or they do that. That would be bad too. Then HR gets involved and the whole company's in a civil war, right? No company wants to be the first one to put that much money into the space, because when you make that kind of investment and you're a publicly traded company, you have to disclose that. You don't just keep it to yourself. You disclose it on a quarterly basis. And by the way, quarter ends in 36 hours. So maybe you'll see some more institutions investing 2 days from now because they'll have a full quarter before they have to disclose it. That could happen. So keep that in mind. I'm not giving that a lot of weight. I don't think that's going to really matter a whole lot, but institutions might be a little bit more willing to invest after they've seen a quarter of solid growth, and they have seen a quarter of solid growth. At this point, Bitcoin has rallied quarter beginning to quarter end 76%. It's had a great quarter. The problem is it had 4 consecutive quarters of decline. We saw January 1st here through March 31st. You saw this sideways movement. It was technically down or sideways. Then you saw quarter 2 of last year. Saw quarter 2, April, May, June, the end of June. We saw a negative 56% in that quarter. Then we saw more sideways here moving into the end of September, roughly. Then you saw another quarter of negative. Now they're wondering, are we going to see a quarter of positive and then a quarter of sideways? As we saw back over here, quarter of sideways, quarter of down, quarter of sideways, quarter of down. Are we going to see, in this case, quarter of rally, quarter of sideways, quarter of rally, quarter of sideways? The institutions would love to see Bitcoin trade sideways at $30,000. They'd love that, but they want to see it trading sideways at $30,000, not at 26, not at 27, not at 28. They want to see it trading sideways at 30 because that means that Bitcoin is now broken back up into that bull market territory that it was in. Bitcoin was in bull market territory at $28,545. Bitcoin was in a hype cycle at this point. The institutions don't want to buy into a hype cycle because that's not driven by fundamentals. That's driven by market sentiment. And market sentiment in the court of public opinion is a fickle thing. They want the market to be in bull market territory. And bull market territory begins at $28,545 because that is the absolute base of the entire market when it was in a bull market. And the institutions know that. My friends, there's $5 trillion sitting on the sidelines and not much of it is deployed yet. We're waiting to unlock the largest reserve of fresh water that Bitcoin has ever witnessed. But to do so, first got to melt the iceberg, right? You first have to fill the lake, right? Bitcoin first has to cross the Rubicon and break into Lower Italy and begin the war for a bull market. But to do so, it has to get above 28,545. It just has to. It is that simple. And that is why I've been talking about this zone between 25,236. I think I've been one of the only people on YouTube shouting out about it. But that's why I've been talking about this zone between 25,236 and 28,545 since like back here. Go back to the beginning of January. I was talking about these three levels right here. 21.5, 22.808, which was right here, and then 25.236. I said 25.236 is the top. We break through that, we're moving into a transition zone. From there, we can go into bull market. We managed to break through those three levels, which were 21.5, 22.808, and 25.236. Now we broke 25.236. Now we're testing 28.545. From there, our next level of resistance, I've already shown you. I'm at risk of repeating myself here, but that level is at 32,935. That's the local level that we saw back here. When we fell below that level is really when we entered into the bear market. Before that, everybody just thought it was another bottom that would be a lower low, and then a higher low, and then we bounced. After that, we knew we were in bear market. So the next major level and this is kind of the last level where I'm saying, okay, we really need to break this to go into bull market to really get confirmed, would be 32,935. 28,545 is Bitcoin's learners. 32,935 is this driver's license. That's when Bitcoin turns 16 and it can hit the open road on its own. Hopefully it doesn't drive off a cliff because of inflation going to 7 or 8% in the next 2 years. But we'll see how time tells on that. The point is right now, Bitcoin needs to break 28,545, and it has the next 24 to 48 hours to do it with confidence, and I think it will. I think it will at least try. Here's the other thing, and this will be pretty exciting to you guys. As of right now, there is a candlestick open that if it closes up here, sets a very interesting movement in motion. In fact, this will be the first time that this has happened in over a year. Right now, we are about to close a monthly chart candlestick, namely the March candlestick is about to close. We've got till midnight on Friday to close that. Midnight UTC, which would be 8 p.m. Eastern. We're at UTC -4 over here on Eastern. If Bitcoin closes this monthly candlestick up here, then that means that we're going to, by the skin of our very buck teeth, have 3 green candlesticks in a row, because the February candlestick looks like a perfect cross. I mean, look at this. It looks like a plus symbol. I don't remember the last time that I saw a candlestick like this. I mean, you have to go really far back into history to find a candlestick that looks like this on the weekly chart. You'd probably have to go back to February of 2018. I suppose it's a February thing. Anyway, that was, as I said, by the skin of its very buck teeth, a green candlestick. If we zoom in here just very, very closely, you'll see that this candle body, which is there, is only, this is a monthly candlestick, by the way. This is 30 days, is only $6 tall, but it is a green candlestick. So that means if we close this candlestick green, which we most certainly will at this point, Bitcoin would have to drop down to $23,000 in the span of 36 hours. It's possible. It's happened before. I don't think it'll happen this time. Then we'll see 3 green in a row on the monthly chart. We have not seen 3 green in a row since here. This was January, February, March. This was quarter 1 of 2021. It was 2 years ago, exactly 2 years ago. Now we're seeing 3 green candlesticks in Q1 of 2023. This happened at the top of a bull market. This is happening at the base of one. This could very well be the beginning of something major. This could very well be something akin to these 3 candlesticks right here, or these 3 candlesticks right here, or these 4 candlesticks right here with this little break in the middle for a red. Whatever may happen, Bitcoin is setting up looking nicely. And by the way, don't forget, on the weekly chart, as we talked about in our video last week, Bitcoin has actually set a buy signal on the weekly chart MACD. I'm sorry, on the weekly chart Lux Algo. That buy signal is very confirmed now, and we're also almost half of the way through the EQ cloud, which is moving to the downside, making it easier every day to break through it. But it's also converging bullish on itself, which means that at these levels, Bitcoin is generating bull market strength and confidence. Even if we're not breaking through the levels that we want to today, we are moving in the direction that we want to be tomorrow. Lux Algo is a wonderful technical indicator. If you don't have it already, you should definitely get it. This technical indicator, just for reference, has called every single bull market in the history of Bitcoin. You can find out more about that by going back and watching our video on how a perfect indicator is calling Bitcoin to $70,000. Make sure to go check that out on the YouTube page. But not just the weekly chart, the monthly chart. On the monthly chart, there have been a few buy signals throughout history, and they've actually called all of the bull markets also, believe it or not. On the monthly chart, you can see that there was a buy signal right here. It was confirmed. This is December of 2012, bull market. Buy signal here, confirmed later, moved us into a bull market. Buy signal that was confirmed here, moved us into a bull market. Okay, there was one buy signal up here that you would have weeded out through technical analysis. It was confirmed, so this is not a perfect chart to use Lux Algo because this was a technically confirmed indication here. But again, you probably wouldn't have wanted to use this for a multitude of other reasons having to do with other technical analysis. Again, it's not always the best idea to use technical analysis of any kind in a vacuum. But Bitcoin right now is moving up to the top of the EQ cloud, could break above the reversals, the trend catcher, as soon as $31,000. And if it does, then that's where you're likely going to see Lux Algo potentially giving you a buy signal on the monthly chart. Now, the monthly chart buy signals typically come in quite a bit later than the weekly chart buy signals, which I think are actually better at calling bull markets. I think the weekly chart is a better resolution to try and figure out if a bull market is coming or not. I think the monthly chart's where you want to analyze a 10-year, kind of like a 10-year trend. I think the weekly chart is really going to give you the resolution you're looking for to determine whether you're going into a bull market, and those buy signals have never been wrong. On the monthly chart, they come in a little bit late. You can see this buy signal got confirmed like a full year after it started, a full year after the weekly chart did. This one got confirmed about 3-4 months later. This got confirmed a few months later. So I would use the weekly chart by preference. But if we have a buy signal on the monthly chart, that will definitely give quite a lot of exuberance and confidence to things as well. And also just keep in mind, just very simply, the way the market looks right now. Just sometimes you have to get rid of all the technical indicators, get rid of all the drawings for a second, and just do an eye check on the market. What's the market doing? It's trading sideways after a giant rally, and it hasn't crashed yet. It's in a bull flag, dang it. It's going to end up doing very well if you give it time. We just need to make sure that that special concoction that Bitcoin has right now of exuberance as a result of lower inflation and 0.25% effective federal fund rate hikes and Bitcoin being up here around resistance is enough for Bitcoin to stay above 25,236 for enough time that something happens that sends Bitcoin above the resistance. Be that a 0% effective federal funds rate increase, be that CPI data coming back as 0.3% to the downside, be that the news on the XRP lawsuit, Sam Bankman-Fried goes to jail, whatever, you name it, bullish news comes out. And Bitcoin has what it takes to break through the resistance. It just needs a catalyst right now. The reaction is all in play. It just needs a catalyst. The reaction is taking place. It just needs a catalyst to come in and catalyze the reaction. There you go. All right. Thank you guys very much for tuning in. If you're enjoying today's show, I want you to do a few things for me. Make sure to hit that like button, subscribe to the channel, and stay tuned for that video coming out on Saturday. I'm pretty excited for that. I'm going to be shooting that today. And you guys are really going to like something I'm going to be working on today. Can't show you yet, but you guys are really going to like it. Really, really going to like it. All right, let's read some chat. We've got a couple of super chats. Thank you. Okay. Thank you for the donation, Richard. I don't think I'm going to read that, but thank you very much for the super chat. Shadrach Frost is in chat, said, who is a member for 19 months, said, folks, take a quick second and click the like button and give back some love and support for Jeb, who comes online daily to educate us. Hashtag FenceOff. Thank you so much, Shadrach. I really appreciate that, my friend. Thank you very much, buddy. All right. Let's see. Let's read some chat here. Might be my favorite Jeb quote. You lost $40 million in 3 minutes? That's a little bit like, you built a time machine out of a DeLorean? It's the same cadence there. Same melody, I suppose you could say. All right. Jeb, you're right, but you need to factor in geopolitical and financial events that are unfolding. That's why Balaji is betting. I'm not sure who Balaji is, but yeah. No, you absolutely do. That's why we talk about geopolitics so much. Sailor just bought more Bitcoin. Yes, he did. And Sailor is in pretty good shape right now because I believe his average his average cost basis, ACB, is $29,200 or something. So they're just barely in a loss right now, as far as I'm aware. I could be wrong on that, but I think that's where they are. Two things I don't bet against: Tom Brady and Bitcoin. If I have to choose only one, I won't bet against Bitcoin. Yeah, I mean, Tom Brady will give up his football career one day. Who knows when? But Revy said, Jeb, I completely agree with your assessment of this rally. Well, thank you. Thank you. You guys don't have to agree with me, but hopefully you guys would. Hopefully you guys are interested. Colin McDonald said, Jeb, you are a very astute chartist. Fair play. Thank you. Thank you very much. The scramble to just get sats will be real and crazy. Wild, Wild West Part 2. Part 2. Crypto Surg said, 727 viewers. Come on, smash them likes. Yes, guys, go ahead and hit the like button. Thank you guys so very much for that. And by the way, if you guys have not already, I highly encourage you to check out Club DeFi's Principles of Technical Analysis, because we just did a lot of technical analysis today. We do a lot of technical analysis pretty much every day. It's the thing we specialize in, and we love sharing with you guys about the charts. But the reason that Principles of Technical Analysis exists is because I want to help you guys become educated on how to analyze the charts yourselves. I want you guys to be able to go and make investments in the charts on your own, and I want you guys to be able to do that without me. Look, my job is not to be here and to talk to you every single day and give you all of the answers. My job ultimately is to, yes, provide you with informational and educational and hopefully entertaining content, but my real job is to educate you to be a free thinker, to educate you to be somebody who is able to process all of this on your own. My father always told me, Jeb, never let somebody else do your thinking for you. Now, somebody can give you a thought, but ultimately you're responsible for your own thinking, for your own rationalization. You are responsible for your own decisions. And so when you're making an investment, I don't want you basing an investment off of, oh, well, Jeb says it's going to go up. Jeb says it's going to go down. I've been wrong. Newsflash, I've been doing this every day for 6 years. You're going to be wrong sometimes. So are you, right? We're both going to be wrong from time to time. But the wonderful thing about you being wrong or me being wrong, yourself being wrong, is that when it's you that's in the wrong, then you can do something about it. If it's somebody else that's in the wrong, you can't do anything about them. That's something you learn very quickly in human interaction, is you can't fix anybody else. But I can work on me. I can make a change in myself through education. I can learn. I can grow. But I can't grow. You can't grow me. You can't make me grow and be a better analyst. So if you're basing all of your investments off of me, then how am I going to grow from you making an investment based off of me? And then that, you see what I mean? Like, if we're going to make an investment, we need to be able to be the ones that are responsible for the victory so that we have reason to celebrate the victories because, hey, we are the ones that did that, right? Not being prideful, but look, I learned something and it paid off. Great. That's encouraging. Or if we make a mistake and we make a bad trade, we need to be able to look at what we did wrong and say, okay, I need to grow here because I can do better there next time. That's how you train an artificial intelligence, and we train artificial intelligence is the same way you train people. You give them a huge amount of data, and you say, this is right, this is wrong, pick. and they pick 1 billion times and they get it wrong 573,295,514 times, and they get it right, whatever that is, minus whatever 1 million minus that is, 1 billion minus that is, and they get it right that many times, and they say, okay, well then I'm just going to start picking the way that I picked when I was right. And you learn. You have to have experience, and to grow in experience, you have to be the one making the mistakes. And that's painful for people to hear because they're like, no, I don't want to make any mistakes. Well, then that's the same thing as saying you don't want to learn. Go make mistakes. Fail fast. Fail hard and learn. But you need to know what to do when you've made the mistake. That's where Club DeFi comes in. When you make a mistake, it's not a bad thing necessarily. It can be. There can be negative repercussions, but it doesn't have to be just a bad thing. When you make a mistake, if you have education, then it comes in and helps you. Think about an educational product like this. If you're going to the gym, I love the gym. Unfortunately, I haven't been able to be there much in the last few weeks, but I love going to the gym. When you go to the gym, and you pick heavy stuff up and you put heavy stuff down, as the people that don't go to the gym like to make fun of people that go to the gym for. And you tear your muscles. And when you tear your muscles, that's the way that you rebuild them. You've got to make a mistake by tearing your muscles and then allowing something to come in and rebuild them. Well, what comes in and rebuilds the muscles? Water, nutrients, protein, etc. You have to feed yourself so that when you make the mistake, if you will, or damage yourself, if you will, you don't just stay damaged. You have to nourish yourself so that you can then grow. Oftentimes, it takes some kind of destruction to grow, right? It's the same thing in cryptocurrency. If you are not making mistakes in cryptocurrency, then first of all, you're not giving yourself the opportunity to grow. But second of all, if you're making mistakes and you don't have education to come in and help you learn how to not make the same mistake again and to grow bigger, to grow stronger, to grow, that's the gym analogy, but in this analogy, or in this reality, to grow wiser and more intelligent, maybe not more intelligent, you often don't grow more intelligent, but grow more wiser, grow more learned, grow more experience, then you're not going to grow at all. You have to have education coming in to fill the gaps and to help you turn what would be a negative experience of losing money on a trade or losing money to a security breach or whatever into a positive thing because you grew from it. But education is like protein to somebody that just went to the gym. If you don't eat enough protein, then going to the gym will just leave your body sore. You won't have grown. If you're making mistakes in crypto, but you don't have education to come in and teach you how to not make the same mistakes again and to become more experienced, you're not going to grow. And I want you to grow because I want you to succeed. And if I want you to succeed, then you have to grow. And so that's why we created Club DeFi's Principles of Technical Analysis, was so that I could teach you what you need to know so that when you make a mistake, you can say, boom, I got it. All right, I won't do that next time. I will do this instead, and I will learn. That's where Club DeFi's Principles of Technical Analysis comes in because it helps you to understand what to do when you make a mistake. It helps you to grow to be a more experienced and better technical analyst and investor. And it also, in my opinion, is going to help you greatly on your journey towards financial sovereignty. Got a lot of people that have gone through Club DeFi's Principles of Technical Analysis so far, hundreds in fact. And so I really appreciate all of you guys that have joined through the beta and through the full launch now. And by the way, if you are a member of CT2A, you're an alumni of CT2A, you can get access to Club DeFi's Principles of Technical Analysis by using a coupon code. Shoot us an email, support@cryptojeb.com, and we will get you that coupon code. And also, if you were in Club DeFi's beta when it was under a subscriptionary model, as we were testing out a few things, then you can get a coupon code for Club DeFi's Principles of Technical Analysis for whatever size for whatever amount of money that you put into the beta. So some people put up to $175 into the beta, so they got $175 off. So you have a coupon code waiting for you if you want to join Club DeFi's Principles of Technical Analysis. Again, guys, there's over 60 videos in here teaching you everything you need to know about technical analysis. I could go through every one of them, but the point is, guys, I want you to learn how to be experienced in cryptocurrency, and I hope you guys have seen through the charting that we've done that it is something that is very, very worth your time. All right, let's read some chat. Really appreciate all of you guys tuning in. As always, thank you guys so much. Queen said, Pastor Jeb is teaching us how to fish for ourselves. Yes, that's the point. That's the point. Anima Vestra Gaming said he's teaching us how to fish, but he's not going to catch the fish for us. Yeah, that doesn't do you a whole lot of good. I remember one time, here's a good analogy for this. I was trying to fish with a cane pole in the backyard. We lived on a canal. And this is back when I was much younger. And I was trying to fish with a cane pole. And I was sat there for hours with bait and everything. I was like probably 8 or 9 years old. I was trying over and over and over again. And my dad walked up and he asked me if I caught anything. And no, I hadn't caught anything. And so he said, let me show you something. And this is the coolest mic drop moment I think I remember from my childhood. He walked up and said, let me show you something. Took the cane pole, cast it into the water, no bait. Okay, nothing. Dry hook. Cast it in the water, pulled it out 2 seconds later, there's a bluegill on it. I'm dead serious. Like, I think he just dropped it right in the way and the bluegill just swam into it. I don't know what happened, but he just dropped it in, sunk the hook, pulled it out, showed me, like, here you go. Here, that's how you do it. And then he walked away. And I'm like, that's great. That was really cool. I'm going to remember that. That was an awesome story. How'd you do that? I have no idea. Right? That's not my dream. I don't want to go and catch a fish for you and not teach you how to do it. Now, I'm not saying he did anything wrong. I think he did end up teaching me some stuff later. But my goal isn't just to show you, look at how cool I am. And again, that is not what my dad was doing. But my goal is not to just say, look at how cool I am. I can catch a fish in 2 seconds and then leave you high and dry because now you have to depend on me. My dream is to teach you how to do that for yourself so that you can do it whenever you want. And then if you want to go and show off to other people, then go do it. Go show off to other people. But I want you to be able to do it on your own. Hopefully that was a helpful story there. All right. Read chat for a couple more minutes, and then I'm going to have to go because we've got some very cool things that we're working on today. Very, very, very cool things that we're working on today. You must learn to sell the tops or you lose. Yes, that's one of the things you definitely have to learn. You can get wisdom from other people's mistakes too. Absolutely. Pretty much everything I teach you in Principles of Technical Analysis is based on either a mistake I learned or just based on, facts like how is RSI calculated. Those are pretty much the two sources of the things I'm teaching you are my mistakes or just empirical fact. All right. Hope you guys did enjoy today's stream. Colin McDonald in chat said, FinSolve all, absolutely. And Colin, thank you for being a mod, my friend. I hope that is okay with you. Again, I didn't really ask you. I accidentally made you a mod, so if you don't want that responsibility, you don't have to have it. But I appreciate you holding on to it. Saturday video topic, you'll have to see, but I believe it's going to have to do with CPI. The having an election is going to explode this run. I wouldn't be surprised. All right, guys. I think I am going to have to go ahead and wrap it out. Really appreciate all of you guys and tuning. I really appreciate all of you guys for tuning in. I am going to wrap it out. Make sure to sign up for LuxAlgo if you haven't already. Make sure to sign up for Club DeFi if you haven't already. If you want one of those coupon codes, shoot us an email, support@cryptojeb.com. Lots of people have utilized them. Dozens of people have utilized them, actually, so you wouldn't be the first. So make sure you use those. Get into Club DeFi's Principles of Technical Analysis. Before we go, I do just first want to thank each and every single last one of you for watching and enjoying the stream, as always. And I will see each and every single last one of you in the next video. Peace.
Oh, I got a real good feeling.